I'm David Bank, and from ImpactAlpha, this is an Agents of Impact podcast.
I would say in a way that sort of instinct and DNA around impact for family offices in Asia has always been around. It's just that the term has not existed.
That's Katy Yung of the Sustainable Finance Initiative, host of Impact Week in Hong Kong. Yung works closely with family offices and asset owners in the Asia-Pacific region to develop their impact investing strategies. My colleague Dennis Price spoke with Katy about what's distinctive about Asian family offices, why global fund managers are beating a path to Asia, and how the region's impact investors are using outcomes-based financing and blended finance to make every dollar go further.
Katy, welcome to the podcast.
Thanks for having me.
We're thrilled to have you. From where we sit at ImpactAlpha, we hear a lot about the rise of impact investing across the Asia Pacific, from Singapore to Japan to Hong Kong. And our audience is keen to know more, and you're sort of in the center of that. You work a lot with family offices and other asset owners. How are they thinking about impact investing in a way that really draws on the region's strengths? Like, what is the Asia's edge in impact investing?
Yeah, that's a very timely and relevant question. I think, in essence, that in terms of the perception that there's an Asian rising interest and force around impact investing, I would say in a way that sort of instinct and DNA around impact for family offices in Asia has always been around. It's just that the term has not existed, and think we've seen it play through families, sort of their giving, a long history of giving through philanthropy. And also, businesses that have been operating for 20, 30, 40 years ago, where a lot of that impetus was to provide employment, uplifting workers with access to better livelihood. I think what's distinctive in what we're seeing around Asian family offices now is, first, the family wealth, a lot of it is still tied to an operating business, which I understand may or may not be the case for some families active in impact and outside of Asia. Um, Second of all, is some families are still relatively young. What I mean by this is they're in their first and second generation, where the wealth creators are still in the room and very much actively involved across business, investments, and philanthropy. And then within the family office infrastructure, I think it's still going through professionalization, and a certain layer of succession. So when it comes to the rise, I think the edge here is we see that their way of looking into impact investing is tied to their operating business for some families. So this would look like them investing in sectors that are adjacent or relevant to their operating business. So, for example, a family in the textile and apparel industry will be, doing some investments on the venture side around new material innovation, supply chain traceability, and circularity. And this also shows in our survey that one of the top two asset classes when it comes to impact investing from families are in venture capital, private equity, and direct investments into ventures. And I think the other edge that we're seeing is because of the philanthropic roots of a lot of the families. There's, the tax incentives, I think, are not the main driver, but we're seeing that they want to see the dollar go further in terms of donations and grants and trying to truly solve a problem. So they're starting to explore things like outcome-based financing, recyclable grants, vehicles, and blended finance.
Katy, that's so interesting. The sort of nature of the family wealth being rooted in operating businesses that you're saying, on the one hand, have these sort of values already baked into the models, and so the extension from running a business aligned with your values and having an impact is there. The extension then to using the wealth created by that business leads, perhaps to easier discussions around impact investing and, like you're saying, sectors that these families know a lot about and therefore can make informed investments there. One of the things we one of the sort of narratives around family offices, at least in the West, is that it's sort of the next gen pushing their parents who were the creators of the wealth into impact investing. From what I'm hearing, that dynamic might be different in Asia, where you're saying it is the first and maybe second gen holders of wealth that are driving this. What does that mean in practice? Is the sort of adoption of these practices or these strategies easier from what you're seeing? What is that transition, or what is that when a family adopts, decides to jump into this? How is that playing out?
Yeah, I think that's a great question, and it's the reality is very nuanced, and I think the way we're seeing it play out is it's an intergenerational effort for those that are serious and making moves around impact investing that is more systemic. The reality it has to be an intergenerational effort. And I would even say that, the word next gen already has some loaded connotations. So in Asia, I see that some groups deliberately use the term now gen to remove biases against, age or experience, or like not overly feed into the typical dynamic or tension that occurs intergenerationally. And, from our recent survey as well, 63% of the participants were saying that, when it comes to their journey of activating impact in the family, 63% was saying that family members, they do need convincing, but they see value considering impact alongside financial returns. And then only 25% are stating that it's not a balanced discussion of sort of either focus around impact or profit. So that historically bifurcated, disagreeing approach. So this to us shows that in Asia, what we're missing is really the last mile consensus that needs to be had, and it's also signaling that there's more family buy-in. Next generation, if you will, has a seat at the table, and the views are heard. So all that to us means progress. Having said that, with our community and the convenings we have, of course, there are typical discussion and tension points around, intergenerational, around family business and capital, and, the legacy around how do we balance the tension between legacy and innovation, control versus empowerment, and preservation versus growth. So those are some resonating themes. I think the sort of workaround or the resolution, or how it's coming through, is pretty practical. Well, first is that anecdotally, some of one family said conflict is actually not a bad thing, and so it's sometimes harmony is in disguise of pretending things are okay when they're not. So having open dialogue is what we're seeing happening among some of the families. We're seeing that some next gen are walking the talk themselves first, so basically making their own impact investments to prove that that you can have return alongside impact. And then some practical solutions are, carve out portfolios, which, ring fence the risks and, the governance against the sort of maybe the main part of capital. And then also alluding to my point that a lot of families still have a live operating business. We've seen the activation happen on corporate venture vehicles, right? And investing, company balance sheet into perhaps venture and technologies and solutions that are relevant to the family business and future proofing it. And also building up internal sustainability teams within the family business.
The idea that a lot of these families embracing impact investing are coming out of operating businesses, that gives them more tools in the tool set to actually perhaps test and pilot some strategies before further adoption. You mentioned the survey you've done. Tell us more about that, and I wonder, does it have any indication of appetite or deployment? Are the families and wealth holders and asset owners you surveyed, is there an uptick in actual impact investments being made?
Yeah. So I think what we're seeing is over 90% of the respondents say they do allocate to sustainable investments. So that's a broader definition. And then 17% are dedicating more than half of their portfolio to these investments. So I think there's this, steady growth, if you will. In terms of sort of uptake, I would say some of the characteristics of that interest is being seen in certain thematics around nature-based solutions, biodiversity, food and agriculture, and health. And also in terms of the approaches, we've seen this evolution from opportunistic investing, 32%, to 18% of them looking into portfolio carve-outs. So it's a gradual evolution of maturing approach that is more holistic as well.
Katie, one of the things we're sort of fascinated by and have been reporting and are going to be doing further reporting on is the sort of regional differences, even within the Asia Pacific. You have the Singapore market that's vibrant right now. You hear a lot about Japan and the pension funds there. And then you're sitting in Hong Kong. Can you just give us a taste of the regulatory environments or capital, investment cultures, appetites for risk? What are some of the nuances? And it could be fairly quick on each, but what are some of the nuances you're seeing across the region?
Yeah, I would say that, across the markets you mentioned, it's not surprisingly quite different. And I would think that, I see Asia Pacific like a mosaic. So each market has its unique dynamics around the impact ecosystem and what's taking shape. So with Hong Kong, we're sitting in Hong Kong. Historically, I think a lot of the impact investing movement has been supported by the local social sector and also private investors. And then I think with the onslaught of green finance and ESG, we're now seeing that the two worlds are starting to converge around notions of climate adaptation, blended finance, outcome-based financing. So that's emerging. In markets like Singapore, I think there's a lot of government support, and also there's a very sort of vibrant intermediary space uh, that's supporting the ecosystem. And then in Japan, we're seeing obviously the pension funds and the policymakers playing a key signaling role, and actually maybe less traditional family offices that are as active. Um, yeah, and I think the implication there is each market has its unique characteristics, and it probably has taken time for each market to grow. So I think I've seen maturity and deepening across all the different markets that we've just talked about, compared to like 5 to 10 years ago.
With some of the challenges facing the West, let's put it that way, at the moment, a lot of fund managers, the GPs, the managers of these vehicles, um, in the West are increasingly looking to Asia for capital. And so those sort of nuances that you laid out are super helpful, as folks think about how to approach families or other institutions in the region. And in particular, like you said, the mosaic that is the Asia Pacific. From the families and other institutions you're working with, how are you viewing that sort of supply of US and European, even Latin American and African funds coming into Asia and looking for, is there a demand from that, from these asset holders in Asia? How is that being viewed, that sort of appetite for capital from the West?
If I may add to the point on Asia Pacific, what we're seeing is that while the markets are deepening and growing, um, kudos to ecosystem builders like GSG Impact and AVPN. They've been doing a lot of work to stitch together sort of the cross-border learning and partnerships across these markets. And what we're seeing is that these sort of cross-pollination is beginning to take shape. So, for example, I think Hong Kong Singapore corridor is growing, and there's potential for these markets to become, a fundraising and structuring hub for Southeast Asia. We're also seeing more alliances in North Asia with Japan and Korea in terms of sharing, in the ecosystem, more sort of collective convening, and also sharing best practices on their policy. And I think back to Hong Kong, China recently became a national partner of GSG Impact, which really signals to us that, in a North Asian perspective, the conversation is deepening. And for us in Hong Kong, we also have a unique role to sort of bridge that and understand, how Hong Kong, China can play a role together. So that's, I guess, the evolving mosaic of Asia Pacific. Um, so to the point on global managers, we definitely, in even in the context of Hong Kong, we've been hosting what we call Impact Access Days, where these are a series of GPLP roundtable convenings. So managers with impact meeting sort of family offices and investors to share their strategy and their trends. It's been growingly more managers coming to Hong Kong. And so I think Asian family offices are well capitalized. I do think they are sort of certain segments are underallocated to alternatives, and they are increasingly curious about impact. So that explains a bit of the shift, if you will, about global managers coming to Asia. Having said that, I think the challenge at times is the pitch to these strategies to Asian families may not land right away, because some of the sort of the narratives or strategies are more, in my mind, are designed for institutional LPs and not for family offices that tend to be in this unique juncture that we're talking about, and they're certainly not homogenous. So I think what this means is, um, as a category of family office investors are looking for something that's beyond the financial return when it comes to impact strategy. So as I mentioned, is it solution for their business? If it's a completely just from an investment perspective, is it giving them access to niche thematics for diversification and co-investment? And for if we're coming from a problem-solving philanthropic angle, are the funds also providing avenues for families to have deeper learning around topics such as smallholder farmers, marine biodiversity, going on site visits or really understanding the community needs.
Katie, a lot of this activity is coming under the tent next month, at both a summit and a sort of full week of events that the Sustainable Finance Initiative is hosting. Tell us a bit more about the summit, Impact Week, and the goals. And is this again a sort of tentpole moment for the Asia Pacific impact investing movement?
Absolutely. I'm very excited about this. This is our fourth year convening the SFI Summit. Um, and, when we first started 4 years ago, it was really out of the pandemic. We were coming out of the pandemic. So we saw the need and white space, if you will, at least in Hong Kong, to do the tent building and advocacy and mainstreaming of impact. So those remained as, the core components of why we are, rolling out Impact Week and being the container ship. Um, I still remember the days when I started impact investing with the family office I was working with. We went to SOCAP, and SOCAP was the vantage point where we started learning about impact investing. And I think there's also sometimes when markets are still, I would say, growing, you need to see it with your own eyes and experience the community and the network to understand, what's going on, and planting the seeds for action for some of those that have not taken action or have not started the impact investing journey. It's always a good vantage point. And for those that have, I think, having collaborators and trusted partners will be a key component. And so we do hope that the Impact Summit and Impact Week will be nurturing more of those sort of deeper relationships as well. For Impact Week, we also want to build in internationality and the potential of sort of follow up action after the summit. So just to highlight across Impact Week, we do have satellite roundtables that are specifically designed around, nature-based financing and strategy for private asset owners, family office and foundations that want to activate a more holistic impact strategy roundtable. And so these are events that are allowing, I think, a cross-pollination of the overseas partners and guests to share them with local actors on the ground. And they're plugging into topics which are already happening in Hong Kong and then in Asia. And so it gives us more fuel following Impact Week and the summit to be sort of continuing that dialogue and building the partnerships as well.
Well, Katy, as a media partner for the event and a publication that's been following the region for some time, we're thrilled to be joining you next week. I will be there. My colleague Jessica Pothering will be there, and we're excited to meet more folks in the industry. So let's leave it there. Katy, thank you for joining us.
Thanks for having me. Looking forward to seeing you in Hong Kong.
That's going to do it for this Agents of Impact podcast. Big thanks to Katy Yung, to Dennis Price, to our producer Isaac Silk, to the whole team at ImpactAlpha, and to all of you Agents of Impact, with deep gratitude for all that you do.